Want a paycheck every month without rental headaches? Enter Covered Call exchange-traded funds. They sell call options on big-name stocks, then pass the option premium to you as cash. Sounds perfect, right? This niche has exploded to $120 billion in assets, triple since 2023 because investors crave yield in a sideways market. Flagships first, QYLD on the Nasdaq-100 throws off a fat 13.8% yield. Brother XYLD on the S&P 500 spits about 13%. Wall Street darling JEPI pays only about 8%, but has sucked in $3.9 billion this year by promising smoother rides. Mechanics 101, the fund owns the index, sells calls, collects option premium, and distributes it every 30 days. You trade upside for cash now. When markets are flat, that deal is sweet. But if the Nasdaq suddenly rips 20%, QYLD captures only half because the calls it sold get exercised. You underperform growth funds. April's tariff tantrum was the perfect lab test. The S&P sank 12%. JEPI fell 10%, cushioning losses. But on the rebound, JEPI gained 11% while the index roared back 20%. Translation: you're buying volatility insurance. It pays when markets idle or drift lower, but it lags when the bull stampedes. Cost check. Expense ratios hover around 0.60% for QYLD and XYLD and 0.35% for JEPI, triple the price of plain index funds. High fees plus option friction can erode gains. Tax twist. Much of that juicy yield is return of capital. Good news, lowers current taxes. Bad news, your cost basis falls, so future capital gains could sting. Who wins? Retirees needing paycheck-like income, or traders rotating into cash flow plays? Who loses? Growth chasers, long-term accumulators, and anyone who can't stomach watching the market moonshot while their fund plods. Quick gut check. If you'd rather see steady cash now than a maybe bigger pile later, covered call ETFs could fit a slice, never the whole pie. Diversify. Pair one of these with low-cost index funds or dividend growers like FiVerge to balance yield and upside. Bottom line, monthly paychecks sound awesome, but every dollar has strings. Decide whether you want fireworks or slow-burn cash flow and size your position accordingly. Smash subscribe if you learned something and drop a comment. Cash flow or growth? Let's debate. Disclaimers, not financial advice. Yields can change. Option strategies may amplify losses. Always do your own research or talk to a pro.